Good evening, students. Welcome to the live coaching classes organized by Board of Studies, ICAI. Today's topic, we are going to have our discussion on this topic called time of supply under GST. We have a next topic continuation to this on valuation under GST. Very, very important topic. So, before we start our discussion as a protocol, let me have a confirmation from some of you. You are able to listen my audio and also you're able to see my slide PowerPoint presentation. Let me just have a confirmation from some of you and then we will start with our today's discussion, right? Good evening, Viraj. Good evening, Shailesh. Hope everything is fine with you. Good. So, before we start with today's topic on this topic called time of supply, quickly let's have a recap of the topic exemptions under GST. What we have discussed in the last class, like we had three series of discussion called exemptions under GST. So we'll have a quick recap of our learning and then we will come back with our today's discussion on the topic called time of supply, right? So let's start with the question and answers. First question. Mr. Zenith, a senior advocate, has rendered his opinion in relation to sustainability of a verdict in a particular case to Mrs. Raju & Co., a firm of advocates. Examine the GST exemption, if any, for the services rendered by Mr. Zenith. Please keep in mind, there's a definition for senior advocate. Senior advocate has been identified as the advocate who allows himself to be recognized as such by the recommendations of the Bar Council, subject to certain expertise gained in a particular branch of law. So here we have this Zenith who happens to be a senior advocate. This particular senior advocate gave his services to a firm of advocates in relation to particular tax matter, whether the citation or the High Court decision is relevant or not. So they wanted to understand whether these services rendered by Mr. Zenith is taxable or exempted. What would be your view? Please remember, examination, it is not compulsory that we have to quote the entry number. If you can examine the provision, if you examine the given problem, that is good enough. So, examine who is the service provider, who is the service recipient, what is the nature of service, and whether it is taxable or exempted. Mansa says exempted. Srinivas says taxable. Okay. Shashi says exempt. Okay. Okay. Why is that exempt, Mansa? What is the logic for your answer? Now, please come to page number 90 of your institute material. Students, as we discuss, keep your institute material handy. All our discussions are reference to institute material. So come to page number 90 of your exemptions chapter. Sorry, not 90, 4.90. Page number 4.90. Please look at this entry. See, services rendered by a senior advocate. Services rendered by a senior advocate by way of legal services. By way of legal services. Now here in the question what we were given, is it a legal service? Question number 1. His opinion in relation to sustainability of a verdict in a particular case. So here, Mr. Zenith, by virtue of his seniority, is giving his opinion. So this opinion is in relation to a branch of law, to a particular firm called Mrs. Raju & Co. This is what we need to understand. So here, point number one, yes, sir, this is in relation to legal service. Okay. If it is a legal service, this provision says to any person other than a business entity, to any person other than a business entity. Can we say, this firm Raju and Co is a business entity? Business entity is an entity who undertakes the activity of business, right? Now, what would be your answer, Mansa? Why you have said this is not a taxable activity? Now, okay. Srinivas is asking, so what is a business entity? Business entity means any person carrying out business. Business entity means any person carrying out business. Now, here, Mrs. Raju and Co, are they carrying out business? Are they carrying out business activity? Yes or no? Answer is yes. They are carrying out business activity, right? So here, any person other than business entity. Since this question is in relation to services given by Zenith to a firm called Raju and Co, this is a taxable activity. So answer for this would be taxable. If this is services by Zenith is not exempt. Services provided by Zenith to an advocate is taxable. So answer for this question would be taxable because Raju and Co is a firm who are into activity of rendering business activity. So here it is not exempted by virtue of clause number C. Next, question number 2. Mrs. Sharma and Co, a firm having class 1 contractor status for undertaking government works. Mrs. Sharma and Co, a firm having class 1 contractor status. What is class 1 contractor status? This is a recognition for civil contractors to bag the government works. So Mrs. Sharma and Co, a firm having class 1 contractor status for undertaking government works. They render the services of providing repair and maintenance of a canal in Godavari district meant for irrigation. The total value of works is rupees 40 lakhs, material is 40%, labor is 60%. Examine the applicability of GST on the above works. Examine applicability of GST on above works. So please examine carefully. Services provided by government, services received by government. If services are received by government, what would be taxable? What would be exempted? When would this activity be taxable? Mansa, I have noted your answer, ma. I'll discuss after question number 2, your point once again. And based on your assumption, your answer is correct, Mansa. Abdul Rahim says metal value is more than 25% taxable. Balaji says taxable. Okay. Balaji, you have to elaborate your answer. Why it is taxable or why is it exempted? I'll wait for one more answer and then we will have a discussion. Good. Taxable income above is 20 lakhs. Okay. Now, when we look at this answer, this particular question, I'll put it this way. Let me just mention. Service provider. Service provider is Mrs. Sharma and Co. Service recipient. Now, who is the service recipient? They render services of providing repair and maintenance of a canal in Godavari district meant for irrigation. Now, when there is a repair to a canal, it is not under the control jurisdiction of a private party. So definitely it will be for state government. Service recipient is state government. Nature of service, repair and maintenance to canal. Now, question would be, is this an activity covered under Article 243W or 243G? Now, what is this Article 243? Activities in relation to activities in relation to panchayat or municipality. So here, irrigation is something which is in relation to Article 243G, activities covered under panchayat. So here we would examine the services rendered to government. Please come to page number 4.85 of your institute material. Composite supply of goods and services. This is what was discussed in 4.85. So here, when we look at the nature of service, this nature of service, we are going to say that this is a composite supply of service having material composition exceeding 25%. Exceeding 25%. So here, by virtue of your entry number 3A, they say composition supply of goods and services in which value of supply of goods constitute not more than 25%. If the value of goods is not more than 25%, it is exempted under entry number 3A. Because here, my value of goods is to the extent of 40%, I would say my conclusion taxable, since composition of goods supplied in the above service exceeds 25%. This is how we give our answer in our examination. Now, again I repeat, entry number 3A, notification 12 of 2017. All these are the aspects which you can quote if you remember. If you don't remember, you can skip that. But giving a wrong serial number will always fetch you a deduction in marks. Right? So if you want, you can generally say, as per the provisions of GST under section 11, read with respect to notification or rules. Now, this is how you can elaborate your answer where you don't remember the respective rule or a notification. If you don't remember section number, you can always say, as per the provisions of GST. That is good enough. But in a anxiety to get more marks, don't quote any wrong section reference. Now, question number 1, Manasa was mentioning that, sir, I presume that service recipient here, service provider is Mr. Zenith, a senior advocate. And service recipient is Mrs. Raju and Co. And her assumption is a business entity not registered under GST due to threshold limit. Now, if this is the answer, if this is an assumption, all our reasoning would change to quantify saying that because the services are rendered by a senior advocate to a particular business entity whose aggregate turnover up to such amount in the preceding financial year makes it eligible for exemption. This is my assumption. Now, please keep in mind, students, when we make an assumption, be very, very clear with respect to your assumption. Now here, question comes here. Why not registered? Or I'll do one thing. I'll come to my PowerPoint presentation to explain this aspect clearly. Whenever you give an answer, please understand, unregistered person, scenario 1, scenario 2. Scenario 1, due to aggregate turnover is less than threshold limit. Aggregate turnover is less than threshold limit. Scenario 2, aggregate turnover exceed threshold limit. All goods or services supplied are exempt. These are the two reasons why a person is not registered. Now here, if you read carefully this particular exemption notification, they say business entity with an aggregate turnover, up to such amount in the preceding financial year, up to such amount in the preceding financial year makes it eligible for exemption from registration. So here they are referring to something called aggregate turnover. So if your turnover is less than the specified amount, because of this reason you're not registered, then you can claim the exemption. If you're falling into this particular scenario, then no exemption. Now, if you ask, sir, is this law so complicated? Answer would be yes. Law is so complicated. That's why professionals like you and me are recognized to support the assessing. Let's look at the third question. Question number 3. Suraj & Co., a firm of legal advocates, assist Mr. ABC Limited for accounting and bookkeeping. Mrs. ABC Limited pays a monthly retainership fees of rupees 25,000 in this regard. Examine the applicability of GST in this regard. So here there is a service provider called Suraj & Co., service recipient called ABC Limited. Nature of activities, accounting and bookkeeping. Please examine whether this activity is taxable or exempted. If it is taxable, why is it taxable? If it is exempted, why is it exempted? Sundar says taxable. Okay. Sridhar says taxable. Okay. Let me wait for one more answer. Mansa says this is not a legal service, not related with any branch of law, hence taxable. Perfectly correct. So here, when we give an answer, we will say, I'll straight away come to nature of service. Nature of service is accounting and bookkeeping. Conclusion, taxable. I'll say the service provided by Mrs. Suraj and Co. is not a legal service under any branch of law. Accordingly, this would be taxable, right? So this is how we present our answers in our examination. With this, I'll end my MCQ and we will come back to our today's discussion topic called time of supply. I have, this is my detailed coverage for today's discussion, students. First, we'll understand what is time of supply by virtue of some examples for you to get more clarity. I'll take you through some definitions, what is relevant for us to understand when we read time of supply. Time of supply for goods, time of supply for services. Section 12, section 13, there is a detailed discussion on goods, on services. Then there is one more section called section 14, which deals with your change in rate of tax for supply of goods or services. I'll explain one example on the basis of this section 14, and then I'll make you understand how do we apply this particular section 14. And I'll also explain common errors, what we come across in applying these particular provisions, and issues in relation to time of supply. Before we start, I'll just give you the backdrop. I'll give you the backdrop why we have to study this topic called time of supply. I use an abbreviation, time of supply. Please have your institute material as a reference book. When I talk about time of supply, the key elements comes here is we will examine the transaction. We'll examine the transaction. In this transaction, we try to identify who is a service provider, who is a service recipient. Then I'll try to identify what is the nature of supply. Nature of supply. Once I identify nature of supply, I try to identify whether there is a levy, on above supply. If the levy, now I could have two scenarios. I could have the levy is taxable, the levy is exempt. If there is a levy, answer is yes, answer is no. If there is no levy, not a GST supply. If it is subject to levy, I'll see whether it is taxable or it is exempt. If it is exempt, students, always examine by virtue of which notification or by virtue of which order this activity is exempt. If it is exempt, again, please understand whether there is an implication on ITC and where I have to disclose in my returns. Suppose if this activity is taxable, then next what will I do? I'll identify rate of tax. Sorry, not rate of tax. First, I'll try to identify what is the nature of supply. It is classification. And based on this, I identify rate of tax. Once I know what is my rate of tax, then I have to determine point in time to pay tax. This is a backdrop where your time of supply provisions come into picture. My time of supply provisions, this is covered under section 12, section 13, and section 14. This is a broad coverage for your time of supply. 12 deals with your goods, services is under 13. 14 is your transition for change in rate. These are the three provisions we will study in relation to time of supply. So, in the entire process, when we examine a transaction, this is a point in time where we will say the liability gets crystallized and pay the tax through Form GSTR 3B. Now, when you get qualified, when you get into practice, someone comes to your office for a legal opinion. Then you need to understand how do you analyze this particular transaction. Straight away, you cannot come into a conclusion. You'll examine what is that you have supplied, what is that you have handled, whether there is a levy, whether this is taxable, whether this is exempt. If taxable, what is the classification? Then finally, what point in time we have to pay taxes. These are the aspects which we will study in our time of supply. Now, we will try to have a understanding. There is a difference between my GST returns and my books of accounts. There is a difference between my GST returns and books of accounts. In the sense, in the sense when revenue recognition happen, when revenue recognition to be made, this is explained in our IGAP or in AS. We try to examine our revenue recognition for accounting purpose. This is for accounting purpose. Similarly, the GST authority examine section 12 or section 13 for revenue. Now, this is the reason why we study this aspect called time of supply. We get a guidance from AS9 when the revenue recognition happens. In similar fashion, when the government is going to get their revenue, my section 12, section 13 is going to explain. I'll give one example for you to understand. Say there is a transaction where Mr. X pays rupees 20,000 as advance to Mrs. XYZ Limited. I'll say A here. Mr. A makes a payment of 20,000 as advance to XYZ Limited, say on 31st March 2021. So on 31st March 2021, we will examine IGAP or Ind AS to see whether this 20,000 can be recognized as income. Now, the same way, section 13, which deals with your services, will examine this particular transaction and say when the GST authority should get money or get the tax from this particular supply. This is what we were trying to understand. So there are certain transactions which causes difference between my GST, my books of accounts. We will examine some of those transactions. First transaction is revenue recognition on the basis of sale on CAF basis or FOB basis. All of you are aware CAF and FOB basis. When I supply goods, I could say commercial terms as FOB or CAF, where ownership is transferred at factory gate of customer. In case of X works, the ownership is transferred at factory gate of seller. Now here, my AS9, if you recollect your revenue recognition, when you go for a statutory audit, what you will do, you will take the sale register, the sales or dispatches, what you will do, you will examine the dispatches from 25th March 2023 to 31st March 2023. And for this particular supplies, you'll ask, please give me proof of delivery. They will try to examine. Point number one, sir, what is your terms? Is it FOB or is it Ex Works? Assuming that all supplies are on CAF basis, you'll ask point number two, please give me proof of delivery. All those cases where the goods are received by the customer on or before 31st March, you will say you can recognize your revenue. Rest transactions, you will say goods in transit. You will make the assessee to reverse the revenue and park this as a goods in transit. Now, this is one point of difference where GST is payable. GST is payable on removal. That is on supply. The moment you make a supply, the tax invoice is prepared and the goods are dispatched on 25th to 31st March. I would not be bothered what is your accounting provision. Based on the provisions of section 12, I'll say, because you raised a tax invoice, please pay GST. This is one point of difference where I could have a difference of turnover. I could have a difference of my transaction under GST, my transaction under bookkeeping. This is my first point of difference. Second point, sale on approval basis. Now there could be scenario where goods are sent on approval basis. When goods are sent on approval basis, unless the customer gives the acceptance, unless the acceptance is received, tax invoice is not prepared. Tax invoice is not prepared. Let us take example of, I'll say, sale on approval. Transaction for sale on approval. Let's take example of, say, jewelry business. Now, in case of a jewelry business, let's think of a HNI customers, high net worth individual customers. Like example, say Shah Rukh Khan or Sachin Tendulkar. If they visit the jewelry shop, entire crowd will be coming to the shop where there is a threat to the security of the shop itself. So where rather than the customers coming to the shop, the jewelry will be sent to the customer's premises. So here, assuming on 1st January 2021, goods worth rupees 2 crores were sent for sale on approval. On 13th January 21, say 1 crore approval received. Say 15th March 2023, 21, another 50 lakh approval is received. And on 30th November 2021, balance 15 lakh approval is received. Now here, we cannot, the HNI clients are very premium, so they'll not pressurize, they'll not push. Sir, you take these goods, whenever you approve, I'll raise tax amounts. Now, this is how I would recognize my revenue recognition in books. But under GST law, there is a time limit of 6 months. They say nothing doing. Anything which is beyond 6 months, I deem that entire supply took place on 1st Jan 2021 itself. They don't even wait till these respective dates. Rather, if the approval is not received within 6 months, they say entire goods worth 2 crores, it is deemed that supply happened on 1st Jan 2021. This is your second reason. My books are different, my GST returns are different. Third aspect, unbilled revenue for services. Now, this is one aspect. Most of the GST officers may not be aware who are from GST or under state jurisdiction. Unbilled revenue for services. Now, this is very, very peculiar phenomenon in service industry. Based on my principle of accrual, what I will do, as on periodical closure, for matching concept read with accrual concept, what I would do, whatever the services, like let's assume that service provider is into manpower contract service, where my billing period is 15th of this month, to 14th of subsequent month. Now, this is manpower contract, or let's assume this is your manpower. Alternatively, let's assume that internet. So I took the connection on 20th. So when I took the connection on 20th, billing will be 20th of this month, to 19th of subsequent month. Now, when I have this kind of pattern, I apply these two concepts for unbilled revenue, where I'll say, sir, I have rendered the services, I have given the services, but these services, I cannot bill unless the billing cycle reaches. Now, unfortunately, this is unbilled revenue in books, but this will not be considered for my GST purpose. Section 13, which deals with services, does not have this concept called unbilled revenue. So this could be another line of difference where my books are different, my GST returns are different. Next aspect to deal with is my distinct persons, where we understand, if you happen to remember Schedule 1, supply, which is covered under Section 7. Read with Schedule number 1. Schedule number 1 of GST Act. Now here, section, when I read Section 7, they explain what is a supply. In this definition, there is a term called consideration. Now, in case of Schedule 1, there is no relevance for consideration, right? Now here, under bookkeeping, under your IGAP, stock transfer is not a sale. This is in my books. But unfortunately, under GST law, we call, say, state 1, state 2. Any person who is registered in state 1, another person registered in state 2, I call these two persons as distinct person. Namakarna. Now, GST law under Section 25, have given a new thought process. What they have said, a person who is having same PAN, registered in state 1, vis-a-vis registered in state 2. So when I have a transaction between this registered person in state 1, vis-a-vis registered person in state 2, by virtue of Schedule number 1, this particular stock transfer is considered as supply. So here what happens? Whenever there is a goods movement between state 1 to state 2, there is a tax invoice to be prepared, tax invoice to be issued for stock transfer. Now, unfortunately, this is something which is not my revenue recognition in my books of accounts. ICAI does not permit this particular transaction. Most of you, when you are doing your GST annual returns, this point in time, you have GST annual returns is covered in GSTR 9. Read with, there is something called reconciliation statement. This reconciliation statement I prepare under GSTR 9C. In GSTR 9C, there is a table 5 where we talk about these transactions. What we will start, what is the aggregate turnover as per financial statements. To this aggregate turnover, we add some transactions, we deduct some transactions. This addition and subtraction is something which are germinated by virtue of your Section 7, read with Schedule number 1 and Schedule number 2. These are the transactions which culminate your reasons for difference between your financial statements vis-a-vis derived annual turnover for GST. This is the reason why we study the GST provisions we prepare the financial statements and explain to the GST officer. So what happens? What happens if I don't explain this particular transaction? Or what is not recognized under my IGAP if I don't disclose in my GST returns? What could be the exposure? Please keep in mind. I'll just come back to the screen. If I don't disclose or comply with GST provisions, if I don't comply properly with GST provisions, penal action under Section 20, 122 onwards would be taken. Not only that, in case if there is any difference of opinion, interest under Section 50 would be called out, right? Now, getting a show cause notice under Section 73 or 74 would be the adjudication or demand wherein penal provisions, wherein demand of interest would also be called for. So for that purpose, we have to read holistically GST provisions. We also have to read something called your accounting provisions. Today, we have one case with respect to a leasing company who is into leasing activity. Now, most of you are aware there is something called other comprehensive income under Ind AS. When you read your Ind AS for 32, this leasing activity, I have recognition of income which is called other comprehensive income. This other comprehensive income is only for limited purpose of Ind AS. This will not be taken into consideration for GST disclosure purpose. So when you prepare your profit and loss account, on the credit side of your P&L account, your P&L account, what is your direct income? What is your indirect income? These aspects have to be tallied with the GST turnover. In the process of this reconciliation, we try to examine the time of supply provisions to justify whether tax is payable or when tax is payable. This is all we are trying to achieve. This is all we are trying to satisfy ourselves when we read this particular provision called time of supply. Next, tax payment on advances for services to be rendered. Now, this is one biggest aspect where most of us, if we don't know the purpose of GST return, then a couple of sessions down the line, I'll explain you what all GST returns we have, what is the purpose of disclosure under GST return, and what reconciliation activities we do. So one of the elements we discuss is in relation to tax paid on advances. I explained the revenue recognition point. My IGAP may not permit me to recognize advances income, but under Section 13, when I deal with services, I need to pay tax on advances. This could be one another timing gap when I compare my books vis-a-vis my GST returns. Next element for our discussion is adjustments in value of supply. We deal with your valuation. Under customs law, under GST law, or under income tax law. As a professional chartered accountant, we study income tax, we study transfer pricing, we also study customs law. So when you come to customs law, we will go in detail how Section 15 will be applied, read with Section 25 to derive what do you mean by value for taxation. Where we add few items, we deduct few items. Notional addition, notional subtraction will be done for value of supply. So under GST law, we have this provision called Section 15, which deals with your value of supply. I'll cover in detail with example when I come to valuation rules, where subsection 2, which talks about what is included in my value of supply. As of now, please keep in mind, because of my valuation, Section 15, there could be a difference between my books and GST returns. Then deemed supply under section 143. This deals with your job work provisions. I'll just throw you some light. What is the job work and what is the relevance of job work for this discussion? Job work, as you all know, this is an activity. This is an activity which supplements the main activity. Supplements or supports the main activity of a principal. I'll give example of say, let's take example of Ashok Leland. Let us take example of Ashok Leland. Where let us take example of say steel and paint. Ashok Leland manufactures, say, chassis. Most of you would have seen this bus or lorry which is having a make of Ashok Leland. This chassis, what is manufactured by Ashok Leland, it does not get all the relevant raw material consumer directly to its factory. It so happens that, let's just for a moment assume that there is a supplier called JSW who supplies steel. There is a supplier called Asian Paints who supply paint. Steel and paint goes to a job worker. For a moment, let us assume that Ashok Leland is in Tamil Nadu. Supplier of steel is in Maharashtra. Paint manufacturer, say, is in Karnataka. And job worker is in the state of Andhra Pradesh. Here, Ashok Leland places order on JSW to supply the steel. Similarly, he places order on Asian Paints to supply paint. This steel and paint, they would, Ashok Leland says, build to my factory in Tamil Nadu, ship to my job worker who is there in Andhra Pradesh. So they say, let the steel and paint travel to my job worker. My job worker, what he will do? He will cut the sheets into design sheets. He will cut the sheets as per the design pattern. And on this particular sheets, paint is applied as per the requirement of my customer. These sheets, after processing, this will come back to the plant at Ashok Leland for further process. Now here, when we read this particular provision, build to ship to, there is a time limit under section 143, which deals with your job work, where it says any items which are raw material or consumables within 1 year from the day the goods are received by job worker should travel back to the principal. In case of capital goods, the time limit is 3 years. So any capital goods which are given to this job worker in Andhra Pradesh, within a span of 3 years, it has to travel back to Tamil Nadu. So what happens if I don't receive back in this particular time limit? Then section 143 says that it is deemed to be a supply. It is deemed to be a supply. What is deemed to be a supply? Ashok Leland has made a supply to the job worker on the date of original receipt of material. This is what we need to understand. Please keep in mind, my job work provisions has given time limit. So here, under my ICAI, I would have maintained, from Ashok Leland point of view. When you read your accounting standard 2, AS2, inventory, Ashok Leland would have accounted this as purchase. When you look at your physical stock verification, in stock verification, you will say inventory at Ashok Leland, inventory at job work. Though material is like a job work, this would be considered as a stock for Ashok Leland. I wouldn't call this as a sale from Ashok Leland to job worker. Unfortunately, this would be a deemed supply. By virtue of section 143 if the goods are not received back within the given time period. This is what we need to understand with respect to deemed supply under Section 143. I'm making you to understand other ancillary provisions. I'm not just focusing on Section 13, Section 12, or Section 14. To the extent possible, I'm making you aware all ancillary provisions for better understanding of this particular law, how this has been framed. Grace period for issuing a tax invoice. Now, this is one funniest and interesting aspect under GST law. In case of services, there is a grace period given for issuing a tax invoice. Why? I'll discuss in detail, maybe 10-15 minutes down the line, why this grace period is given, what is the relevance of respective rules under GST law. Now, time of supply, we will study certain definitions to understand this provision. We also understand provisions under Section 31. Section tax invoice, when we read, we need to read provisions of Section 31. Then we study disclosure of this particular time of supply or implication of time of supply under GST law for filing of returns. Section 39, which read with Section 49. Section 39 deals with your GSTR 3B. Section 49 deals with your payment of tax. Students, please keep in mind, this one slide is good enough to understand Section 12, Section 13. I repeat, this one slide is good enough to understand entire Section 12 and Section 13. Then we also have some deeming provisions, like example, Section 143. So there are, like Section 143, there are certain provisions, like example, Section 15. Section 15 deals with your valuation. Section 143 deals with your job work. Though there is no supply as per books. For the purpose of GST, I would call that as a supply, and my time of supply is triggered for payment of tax. This is what we need to understand. So here, we will study some definitions, like example, what is removal, or what is an associated enterprise, or what do you understand from the definition called service or continuous supply of service. Or we have one more definition called recipient. We will try to study some definitions. We understand how these definitions are connected with my topic called time of supply. If you don't have a clarity, definitely this will vitiate your thought process. Also, we will study something called tax invoice, where we will study what are the contents of a tax invoice. We will study something called self-tax invoice. Self-tax invoice. Tax invoice for outward supply, self-tax invoice for RCM, or tax invoice for forward charge mechanism. So I'll make you to read Section 31, read with respective rules, how tax of supply will be evaluated. Similarly, once a time of supply is triggered, what is that I have to disclose in my returns, and what is that I have to pay in my returns. This is my total discussion we are going to have in our today's discussion. Before I go further, let me just see if there are any doubts. Yes, Mansan. When I refer Section 12, Section 13, Section 14, Section 15, I refer to CGST and SGST provisions. Good that you brought this point, Mansa. Unless and otherwise I mention IGST, please keep in your mind, we are going to discuss on section references of CGST law or SGST law. Students, if I'm going slow, please let me know. I'll increase my pace. If this pace is okay, I'll maintain the same tempo to explain you in detail the provisions. First definition, associate enterprise, income tax. Majority of the article assistants or majority of the students who pursue their CA, they get more expertise on income tax by virtue of their articleship. We would have come across these provisions under TDS chapter, where the section 92A would have been discussed under TDS. What is an associated enterprise? When this particular associated enterprise would be triggered. Read with your income tax, we had this related party transaction, which we disclose in our notes to accounts. When we prepare our financial statements, in our financial statements, based on our IGAP or Ind AS disclosure, we have to report certain related party transactions. So part of that carved out is your associated enterprise, where they say, basically, associated enterprise means an enterprise who participate directly or indirectly. It could be a direct participation or it could be an indirect participation or through one or more intermediary. For what? For management or control of reporting enterprise. This is an important point where they say when we are talking about a particular company, say particular company who is a registered person. This registered person, they try to evaluate on the basis of your notes to accounts. In my notes to accounts, I have Forex inflow, Forex outflow. This Forex inflow, outflow is something which I evaluate whether the provisions of time of supply are properly complied. This is how the information is picked up for examining your time of supply under audit under section 65. So when an audit under 65 is covered, they try to examine whether you have paid tax promptly to the government. I'll give one example connected with this particular associate enterprise. Let's take example XYZ Limited. XYZ Limited made a provision for import of service. Say this import of service is in relation to say technical know-how. On 31st March 2023, based on your IGAP, there is a provision which was created. Actual bill has been received on the 15th April 2023. Say I could have made a provision for, say, let's take an assumption that for 1,50,000 US dollars. Actual bill has come for, say, $1,30,000. I make necessary adjustments for this particular gap. When we read this particular aspect under income tax, TDS, we will say, because it is an associated enterprise transaction, TDS needs to be deducted. Similarly, under GST also, there is a separate provision under section 13, which deals with your services. For that reason, we need to understand what is the associated enterprise, from where in our financial statements we try to identify this associated enterprise. Next, reverse charge. This definition is pretty simple. It says liability to pay by the recipient. Liability. What is the liability? GST. Tax liability to pay tax by the recipient of goods and services under either section 9 subsection 3 or section 9 subsection 4. Please keep in mind 9 subsection 3, 9 subsection 4. Students who are not well versed with GST provisions, or you would not have practiced indirect taxation in 3 years of internship, I'll give better clarity how we read these two provisions. 9 subsection 3 deals with notify list of goods or services. 9 subsection 4 deals with real estate transaction. Real estate transaction for notified persons. For notified persons. So as on today, when you read GST law, my 9 subsection 3 is for notified list of goods and services. So here I go based on goods and services. 9.4, I go based on the person for whom when a real estate transactions are applicable. This is how we understand this definition under reverse charge. Next, definition for continuous supply of goods. Supply of goods, we are aware. Definition for continuous supply is what they are trying to focus upon. So they are saying that it is a supply of goods, how, which is provided or agreed to be provided. Now, provided, agreed to be provided. What is the difference between these two? Provided, verb or verb, action is completed. Agreed to be provided, yet to complete. Right? So they say it is a supply. Supply for what? Supply which is already provided or agreed to be provided. How? On a continuous basis. This is on a continuous basis or on a recurrent basis. General English. I make a supply. This particular supply is either on a continuous basis or recurrent basis under a particular contract, whether or not by means of a wire, cable, pipeline, or other conduit. So they're saying that in case of a continuous supply of goods, this is undertaken through wire, cable, pipeline. Like example. So what would be the activities supplied through cable, pipeline, wire? Let's assume that gas. Now the electricity, so this domestic gas, for cooking purpose, the gas what we purchase, I could have purchased a cylinder where the supplier would come to my doorstep and make a supply. On the other hand, assuming for a moment, I stay in a high-rise apartments where I stay in a villa where the gas cylinder does not get supplied. Rather, there will be a gas pipe which is running through all the apartments. Like example, say Reliance or Adani or BP or HP. I could have these service providers or the suppliers. Gas is a goods which are supplied through conduit or which is supplied through a pipe. So I could have a gas which is supplied continuously under a contract based on my consumption. There is a volume which is measured on periodical basis. First to 30th, they measure the volume and then they issue a particular bill. Includes, in this case, they say where supply for which supplier invoices the recipient. This particular invoice is issued on a periodical basis on the basis of a statement or on the basis of any other parameter which is under the contract. This is called continuous supply of goods. Similarly, is your services. The way we have goods, we also have services. Contract is there even in goods, contract is there under services. But under this definition called continuous supply of services, I have one additional aspect called exceeding 3 months. Only if those services are continuous, only if those services are on a recurrent basis, which exceeds 3 months, I call this as a continuous supply of services. Continuous supply of services. If this is not made, I cannot call this as a continuous supply of services. What could be the example? Supply of your internet, ITL, your telephone telecommunication services, or maybe security. These are all called as a continuous supply of services. Now, removal. This is one definition. Unless we study the intent of the GST law, intent of central excise law, we don't understand what is the importance of this particular definition called removal. Now, please keep in mind, students, we are in CA final. Expect the unexpected. expect the unexpected. In CA final, if there is a question asked under income tax law, define India for 3 marks. Don't get surprised. This is how the final questions are set. Define the term removal under GST law. Now, when a question is asked on a particular definition, definitely there is some concrete reason behind that particular question for framing this particular definition. So from GST point of view, this term removal was defined in 2 parts. Part A, that is limb A, it says removal in relation to goods. This is applicable only to goods and not applicable to services. What do they say? It means dispatch of the goods for delivery. Dispatch. The term dispatch, it is not defined. We will go as per the legal dictionary or the other simple dictionary. Dispatch means taking the goods out of premises, taking the goods out of factory, or moving the goods out of a particular registered bonded warehouse. This is a simple definition for dispatch. Dispatch of goods for delivery. For delivery. What do you mean by delivery? The way I have an intent to make a supply. I have an intention to transfer. This is what we understand from delivery. By the supplier. Now, this activity is done by a person called supplier. So I have a dispatch which is meant for delivery, which is made by supplier. Thereof or by any other person. Thereof or by any other person acting on behalf of such supplier. So here they have used the term called this delivery is done either by the supplier or by any other person. By any other person acting on behalf of such supplier. So here, when we talk about this particular any other person, please remember one good example, GTA. Baylor, Bailey. This supplier happens to be Baylor and this particular GTA happens to be Bailey. So Baylor transfers the goods, not the ownership. Baylor transfers the goods which is meant for delivery to Bailey for insurance purpose, for the purpose of contract act, for the purpose of transporting the goods to the end recipient, right? This is clause A, which talks about removal. Clause B, another link, which says removal means, removal in relation to goods means collection, collection. Here, dispatch. Here, collection. Who can collect? Collection of goods by recipient. Collection of goods by recipient. Thereof or by any other person acting on behalf of such recipient. So, the recipient can collect the goods or any other person on behalf of this particular recipient who has been engaged can collect the goods on behalf of the recipient. This is my simple definition for removal. I'll come to detailed explanation on this aspect called removal. Now, very technical. How do we understand? Central excise point of view, we had a principle called central excise needs to be paid on removal of goods. This is the definition. On removal, central excise needs to be paid. Sir, I have not issued a tax invoice. I don't mind. You remove the goods, so please pay central excise. Sir, I removed the goods for job work. I don't mind. Because you remove the goods, pay the job work. Unless there is an exemption notification. Unless there is a relaxation. I removed the goods for job work. You have removed the goods, please pay the GST on removal. So here, when we talk about removal, I could have my intention. I could have intention for various aspects. What is that? Point number A, which is meant for supply. Point number B, I could have a removal maybe for job work. Point number C, I could have a removal for stock transfer. I could have a removal for sale on approval basis. I could have a removal other than supply. Other than supply. So here, these are various modes which we can think in relation to removal. So here, when you read this particular definition, Clause A is talking from supplier's perspective. Clause B is talking from recipient perspective. Recipient perspective. So when you talk clause A, my intention could be free on road or CAF transaction. My commercial terms could be free on road, where supplier has an interest to supply the goods till factory gate of customer. So if the goods are removed, meant for delivery by the supplier or any other person on behalf of the supplier, then it is called removal. So if the goods are meant for delivery, when the goods are removed by a supplier, then I call this as a removal. Please keep in mind, students, this term removal I use in section 12 for examining time of supply. Similarly, when I talk about section clause B, this could be a transaction of X work, where at the factory gate of supplier, ownership is transferred. At the factory gate of supplier, my ownership is transferred. So here, recipient or the GTA duly appointed by recipient will collect the material, will collect the goods from factory gate of supplier. This could be a case where recipient is collecting the goods or any other person on behalf of the recipient collect the goods meant for removal. This is my definition under A, definition under B. Let me see if there are any notes. So far, so good. Now, this clause 96 defines removal in these two aspects. Now, before I start with section 12, straight away, I give a couple of examples, food for thought. So how do we apply these provisions of section 12? How do we apply provisions of section 13? And how do we guide the assessee when to pay taxes and when to report these taxes in my GST returns? Let us take example of a daily fresh grocery vendor. So there is a grocery shop. This grocery shop person may have online portal or may have telephone where the good orders are taken for delivery. Let us presume that there is an online portal. Now these days, post-COVID, we would see the dynamics of business has been completely changed. Let us take for a moment, there is an order placed by a customer for rupees 12,800 on 29th Jan 2023. For this particular order, money has been received including taxes. So, customer has, like most of you, when you recollect this example, you have big basket. Sitting at your home, you will place order for your monthly groceries. On 29th Jan, you place an order for 12,800 and unless you make the payment or assuming for a moment, let's assume that unless you pay money, your order will not be placed. So along with the order, money has been paid to the seller. Goods have been dispatched on 1st Feb 2023. Goods have been dispatched on 1st Feb 2023. So here, when I look at my ICAI, when I look at my accounting, when I look at my books on 31st Jan 2023, assuming that I close my books of accounts, when I receive money of 12,800, I would have debited my bank account. I would have credited my orders received but not serviced. Maybe I will not keep B2C as a separate GL. I would say I'll create a liability, orders received but not serviced. So here, a current liability is booked, revenue is not recognized for 12,800. Goods were dispatched on 1st Feb 2023. Invoice to be raised on what date? Under ICAI, can I raise the invoice on 29 Jan? Probably no, because unless risk and rewards are transferred, unless the ownership is transferred, on 31st Jan 23, I cannot raise a tax invoice. I'll raise the tax invoice on 1st Feb when the goods are actually removed from my factory. Please remember this definition of removal, where we have studied that removal could be by supplier, removal could be by recipient. So in this case, the supplier would have removed the goods on 1st Feb. So tax invoice would be prepared on 1st Feb 2023. Now GST purpose. Money was received on 29 Jan. Can the GST officer say, look, including tax you have received on January, why should I wait for February? The point here would be tax invoice if raised in Jan 23, tax invoice if raised in Feb 23. Out of 12,800, for hypothetical discussion purpose, assuming GST is for rupees say 1,500. Now, if I raise a tax invoice, in January, my return for January would be filed on 20th February 23. If I raise a tax invoice in February, the tax on this would have been paid on 20th March 2023. But whereas this 1,500 was collected by the customer on 29 Jan 2023. Mansa, your question which was asked in the previous session, you remember? Like today's one example of canal services. So when GST is there, you're rendering services to the central government or state government or a local authority. Why GST is being charged? Similarly, your own thought process extension. How does the GST law will be formulated? How a policy is made? How a provision is made? Can I frame a section keeping in mind the money received? Can I frame a section on the basis of aspect called removal? We had discussed a section definition called removal. Can I formulate a section? Can I formulate a provision saying that the day when removal happens, that point in time, please issue a tax invoice? When I say tax invoice, students, please keep in mind section 31 deals with tax invoice. So how does my GST law, section 12, works to recognize the supply? I'm just giving an example. I'll give in detail the provision when we go further in the discussion. I like this particular entity for various reasons: the compliances, the responsibility, the authenticity, the transparency, and all. Let's take example of this Taj group of hotels. I assume that there is a customer who made a booking on 15 Jan 2023. He made an advance payment for 25,000. So on 15 Jan, when he made a booking, he deposited 25,000 as advance. This particular booking was for an event or for a particular occupancy to be made on 15 Feb 2023. So generally, the practice in this particular service industry, whenever you make a booking, at this point in time, some notional advance has to be paid. So here, on 15 Jan 2023, advance were paid for 25,000 in relation to a hotel booking which has to take place on 15 Feb 2023. Charges incurred for accommodation and food. Now on 15 Feb 2023, when actually the guest takes the position, he is coming here for accommodation and he is coming for food. For a moment, I assume that the event is, so there is a celebration. What could be the celebration? Say someone's birthday, someone's marriage day, someone's any other wedding anniversary, etc. So they would like to have a stay in a hotel. They would like to have a sightseeing and also wanted to order for some special cake and dish. So when I paid advance on 25,000, I have paid for accommodation. I have paid for food. Probably I have paid for vehicle, for sightseeing. So what is relevant here? All this money, what I have received, this is service taxable at the rate of 18%. Food is taxable at the rate of 5%. Vehicle is taxable at the rate of 18%. Sightseeing is taxable at the rate of 18%. So how do I know what rate of tax I have to apply? Sir, how do I know what is the nature of supply? Is it intrastate? Is it interstate? Now, these are all questions which are packed together in one particular transaction. Now, when you're understanding these examples, please keep in mind you're going to get qualified as a chartered accountant very sooner. Once you get into industry, could be a manufacturer, could be a service, you may be into practice also. When you are in practice, you could have do all these activities: internal audit, statutory audit, tax audit, or GST consultation. You have to examine these transactions, understand the GST provisions, understand the income tax provisions, and how we apply these aspects. We have to get answer for what is the rate, how do I treat, how do I book this advance. Now, for a moment, let's assume that there's a zero refund policy. Zero refund policy. Now, my accounting treatment under ICAI, how if no refund is there, how when refund is there. If refund is there, I would call this as a current liability. If no refund is there, I would call that as an income. Now, this accounting treatment, how do I map with my GST returns? These are all practical complexities we have. And for that purpose, once we get qualified as a chartered accountant, we get recognized for understanding the nitty-gritties of the accounting, understanding the nitty-gritties of income tax or indirect tax. How do I design my accounting architecture? How do I put my controls, my SOP, my IFCR, I design my internal financial controls to take care of my reporting in my GST returns. Various reconciliation activities goes in for this particular service industry. Please keep in mind, students, I'm not making you scared. These are all practical exposure we are going to have on these aspects. Next. Example number 3, removal of goods on CAF basis. What is CAF basis? Cost insurance free. Cost insurance free. Goods are dispatched on 28 Jan 2023. My goods are received by customer on 5th Feb 2023. Acceptance was received on 6th Feb 2023. GST on this transaction is 36,000. Now, question comes here. Should I pay this GST in the month of Jan 23? Should I pay the GST in the month of Feb 23 when customer gives me confirmation or when customer gives me acceptance? What is the disclosure I have to do in January? What does the definition of removal mention with respect to GST? Whether this could be called as a goods in transit as on Jan 2023. And if I have paid 36,000 in Jan 2023, but I got to know that the customer has rejected on 6th February. Should I pay tax? Should I not pay tax? On 31st Jan 2023, I have issued a tax invoice. My return for Jan 2023 should be filed on 11th Feb 2023, which is called GSTR1. On or before 11th February, that is 6th February, I got to know that customer has rejected the material. Now, can I issue a credit note under section 34 for this goods on 31st Jan 2023? These are all the practical questions we have, where I discuss only with respect to time of supply. In this class, maybe 3 classes down the line, I will discuss the provisions of debit note, provisions of credit note in relation to GST. This particular example, I'll give more clarity in the coming sessions. I'll skip this particular example, paucity of time. Now, please keep in mind, whenever you look at a transaction, examine what does your section say with respect to supply. If supply is met with, I examine whether this is subjected to levy. If this is subjected to levy, then my job is to determine what is my time of supply, rather when I have to pay tax, when to pay GST. This is my process where section 12 or section 30 comes into picture. Now, this is my section 12, which talks about time of supply for goods, where it says that time of supply for goods shall be earlier of the following. My time of supply for goods shall be earlier of the following, like income tax. When you have to deduct TDS, TDS deductible on accounting or making the payment of advance, whichever is earlier. Similarly, I have two cases where scenario 1, where date of issue of invoice by the supplier or the last date is required to issue with respect to supply. Issue of invoice or last date is required to issue the invoice. So when you say about this, section 31, read with definition for removal. If I have issued an invoice under section 31, or I ought to issue an invoice under section 2, clause 96, definition removal, that would be the date of time of supply. Scenario 2, date on which supplier receives the payment with respect to supply. So here, like your TDS transaction, I make the payment of advance. Here, I receive the payment. Supplier receives the payment with respect to goods. Earlier of these two, they say, is the time of supply. Now, there is a provision. I just discuss this and I'll elaborate in detail by virtue of an example. Provided that if supplier of goods receives an amount up to rupees 1,000 in excess of the amount indicated in tax invoice, excess of amount indicated in the tax invoice, my time of supply shall be at the option of supplier be the date of issuance of invoice. So at the date of my option, whenever I want to issue a tax invoice, that will be my tax invoice. This is what it says. Please keep in mind, this was the original form of your GST provision. This particular advance, the money received in advance, has been relaxed in October 2017. October 2017, this particular provision is relaxed. So, as on today, your scenario 2 is redundant. Scenario 2 is redundant. What is relevant for me? Only scenario 1 is relevant. This is what we need to understand from section 12. Section 31. When I was talking about section 31, it says tax invoice to be issued before or at the time of removal of goods for supply to the recipient or making available of goods. Now, this is one slide where by virtue of this particular notification 66 of 2017, your scenario 2 was made redundant. That means whatever money I receive in advance for goods, I need not pay GST. In attention, no time of supply for advances. This is what we need to understand. I'll come back to this particular section 12. I'll explain this section 12 with an example. Date of invoice. Date actually, or I'll make this little simple. There is a seller called ABC Motors. ABC Motors. They sell a tractor. There is a buyer called Mr. X, who is a farmer. The value of supply is, say, rupees 10 lakhs. Rupees 10 lakhs. My GST is at the rate of, say, 12%. On 10 lakhs, my GST is rupees 1.2 lakh. Total invoice value is 11.2 lakhs. Is 11.2 lakhs. Now, for a moment, let us assume that buyer has only 2 lakhs money cash with him. For this buyer can approach a banker. Let us assume that State Bank of India. State Bank of India says, look, I can give you a vehicle loan only on the basis of a tax invoice. That means to say, when you make an application, mere on the basis of a estimate, mere on the basis of a pro forma invoice, look, I cannot give a vehicle loan. As per my banking norms, I can give you a loan only against an asset. Security has to be created. Unless the security cannot be created, I cannot sanction you a loan. So here, let us assume that the relevant dates. Date of invoice. Date of loan sanction. Date of actual possession. Or I would say removal. Now, date of invoice. I have, as a seller, ABC Motors has given invoice on 15th April 2023. Banker took, say, 3 months and sanction happened on 15th July 2023. The customer, Mr. X, came to my shop and took the delivery on 18th July 2023. So here, what is the relevance of my section 12 for time of supply? Should the tax to be paid on 15th April? Should the tax to be paid on 15th April? Or should the tax to be paid on 15th July? Or should the tax be paid on 18th July when actually the goods are removed? Now, I'll give one more date. Date of receipt of money. Date of receipt of money. So on 2nd August 2023. Just a hypothetical thing. I have received money. So when I should pay tax in this regard? My section 12, when I read, what is my time of supply? When should I pay? So answer in section 12, it says tax invoice, that is the day you have prepared tax invoice, or the date on which actually the tax invoice should be issued. So here, my tax invoice ought to be issued on removal. But because the customer wants this tractor, I have issued the invoice on 15th April itself. Because the invoice was issued on 15th April, my time of supply gets triggered at this point. The date on which loan is sanctioned is irrelevant for my section 12. Similarly, removal of the tractor from the showroom is also irrelevant. Date of money actually received from customer is also irrelevant. As the owner of the showroom, as the seller of this tractor, ABC Motors have to pay this tax on 15th April. That is, this transaction will be considered as a supply for April 2023. This supply, which is considered as a supply for April 2023, by virtue of section 12, liability is for April 2023, and this will be paid on or before 20th May 2023 when a written under Section 39, that is GSTR 3B, is filed. This is how I understand provisions of Section 12 in relation to removal. Are there any doubts, students? Are there any doubts? So far, so good. We are at 7:35. Let us have a break for 10 minutes. Let us resume back at 7:45. Let us continue with our discussion. Hope there are no doubts till whatever we have discussed. Let's move on to next topic. Advances. I have said that there is no liability to pay GST. There is no liability to pay GST on advances for goods. On advances for goods. This is a very, very big savior in relation to time of supply for goods. Reason, keeping a track of advances, making the remittance of GST is a very tedious job. Now, section 31, read with your definition for removal. This is the clarity what we need to understand. Issuance of invoice as per section 31, they say before or at the time of removal of goods for supplying to the recipient, make a tax invoice. Before or at the time of delivery of goods, making available thereof to the recipient, prepare a tax invoice. Section 31, which deals with your issuance of a tax invoice. So here, this provision clearly says that before or at the time of removal, before or at the time of delivery, please prepare a tax invoice. Now, when we talk about tax invoice, if the goods are taxable, we issue something called tax invoice. If the goods are exempt, I issue something called bill of supply. This is covered under section 31. Under section 31, this is a clarity which is given, right? Government on the recommendations of council by notification specify the categories of supplies in respect of which tax invoice shall be issued within such time as may be prescribed. Now, there's one small aspect called monies received in excess of a tax invoice. Money received in excess of a tax invoice. I'll explain that provision this way. Time of supply for money received in excess of tax invoice up to rupees 1,000. Now, I'll give you an example where this particular transaction comes into picture. Say there is a delivery of goods. There's a delivery of goods for, say, I would say gas, industrial gas. It so happens that customer orders for 10 kgs of CO2. A tax invoice is prepaid at factory of supplier. This from the factory gate, this goes for a weighment on the way to customer, and it reaches customer. Now, it so happens that because of various factors, mass, density, climate conditions, etc. This 10 kgs, what I have actually built, my weighment could be, say, 9 kg. Customer makes the payment for 9 kg. Now, there is a shortfall of 1 kg. See here, customer prepared a tax invoice for, seller prepared a tax invoice for 1 lakh. But actually, delivery was made for 90,000. There is a gap of 10,000. Now here, my section 12 talks only cases where The value is up to rupees 1000. Now here 10,000 is more than your provision. Then on 10,000 the GST has to be paid on the day the tax invoice was issued. Alternatively, the very same example, I'll slightly alter the figures. Instead of 10,000, 1 lakh, I'll say 10,000. I prepared a tax invoice and customer actually paid advance for entire 10,000. Now here, the delivery came for say 9,600 rupees. 9,600 rupees. Looking at the payment, the credit note was issued by the supplier for the shortfall. Now, I as a seller, I received advance for 10,000. My tax invoice was for 9,600. There is a gap of 400 rupees in my books. Here, section 12 says that seller has a choice. Seller has it is option. Decide when to pay tax on this particular 400 rupees. Assuming this corporate tax it is taxable at the rate of 12% on this 400 rupees, whenever subsequent billing is there and whenever this is adjusted, that point in time, the GST can be paid. So this is what the provisions of section 12 says in relation to money received over and above this particular supply. This is what it says, section 31. Provision where up to rupees 1,000 under section 12. There is one another concept called revised tax invoice. This is a little important. Technically, most of you would not have come across this particular situation for revised tax invoice. I'll give one example. Say, Mr. X applied for registration on 10th April 2023. Approval has been given on 5th May 2023 with effect from 10th April 2023. So here, I file an application for registration. Sorry. Just give a minute. I'll give this example. So register in the case of a revised tax invoice. Revised tax invoice. Say date of application. Date of application is on 10th April 2023. My approval, that is GST officer, has approved my application on 5th May 2023. This registration was given an effect with effect from 10th April 2023. That means to say, officer has approved my GST registration on 5th May 2023, where he says, this registration is effective from 10th April 2023, the day you file your application. April 2023, 5th May 2023. Now, business is dynamic. I cannot apply for registration and wait till the approval received not to do business. what I will do during this period, I issue something called tax invoice. Only thing, I may not collect tax. I have issued something called tax invoice. So here, this provision, section 31 says that, look, the day you have applied and the day you got the approval, this intervening period, whatever tax invoice you have issued, you have a choice to issue something called a revised tax invoice with GST, to collect tax. So what I will do during this intervening period, I'll issue a tax invoice for basic amount, and once my application is approved, I'll issue a revised tax invoice with whatever GST is there for collection of taxes. So this is covered under section 31, read with section 32, read with section 12. This is what I was trying to explain here. So they say that under section 31, I can issue a revised tax invoice within a period of 30 days from the date of issue of registration. So here they are saying that because my approval was received on 5th May, from here, within 30 days, I have to issue something called revised tax invoice. So whatever tax invoices I have issued from 10th April to 5th May, within 30 days, I can issue revised tax invoice. This is what I was explained under section 31, read with section number 2. Next. Removal of goods on sale or approval basis. Here, my GST provisions say that, look, I'll give you permission to remove the goods which are meant for approval for sale or return. These goods should be received back within a period of 6 months. Or you can make a supply before 6 months. If I don't receive the goods within 6 months, I presume that the day you remove the goods, same time of supply is triggered. I'll explain this by way of an example. Let us assume that XYZ Limited is a seller of brake shoe. Customer ABC Limited, OEM customer. Now, when I talk about brake shoe, these are the brakes which are applied in a particular motor vehicle. Whenever we talk about a particular commodity with respect to OEM customer, there is a simulation or there is a testing which is undertaken. So unless goods are approved, the bulk production may not happen. For this particular purpose, section 31 comes into picture and says, on the day, assuming that removal happened on 10th April 2023. My 6 months period as per GST law is ending on, say, 10th October 2023. My approval from the customer could have been received, scenario 1, scenario 2. My approval from customer could have been received on 5th July. Notes with respect to this particular provision, let me know. You have any doubts, please let me know. Hope you are clear with the discussion, whatever we are doing so far. Unless I receive a confirmation, I cannot go forward, ma. I need to understand whether you're in pace with the discussion or not? Oh, thanks for the confirmation, Balaji. Yeah. Time of supply for 6 months I have explained. In case of continuous supply of goods, where like I gave example of gas. When we talk about these high-rise apartments where gas cylinder has to be like your gas pipeline will be there. I consume gas as in when I consume to the extent the volume is consumed for a particular period, a tax invoice will be issued. So here, Section 12 says that invoice has to be issued on or before time of statement or as the case may be payment. Either a statement is issued or payment is received. Like here, I could have a contract where I'll say per month, please pay me 5,000. Please pay me 5,000. This is fixed. Now I may consume less, I may consume more. Based on this particular amount, if payment is fixed, whenever payment is received, I raise a tax invoice. Instead of fixed amount, a statement is generated on the basis of number of units, number of kilos I consume. I have to raise a tax invoice. Section 31 says, please raise a tax invoice if a statement is issued, or please raise a tax invoice if a payment is received from the customer. Now, in relation to reverse charge mechanism, Section 9, subsection 3 of CGST Act. So here, Section 9, subsection 3 says, please pay the tax earlier of these three things. In relation to goods, these are tangible. So here, the date of receipt of goods, like when the goods have been received at factory, security seal entry, on that day, time of supply is taken. Or date of payment. Whenever you make the payment to the supplier, my time of supply is triggered. Or date immediately following 30 days from the date of issue of invoice. Like tax invoice issued on 30th Jan 2023, on or before 28th or say 28th plus 2, 2nd March 2023. My time of supply is triggered when I read 30 days. If my date of invoice as per tax invoice is 30th Jan 2023, 30 days from here happens to be 2nd March. So I have to examine date of receipt. I have to examine date of payment. I have to examine 30 days from date of invoice for triggering what is my time of supply. Supply of vouchers. Now, vouchers, I'll give one example which will be easy for both goods and services. Just give me a minute. Vouchers. Voucher is a instrument. I wouldn't say negotiable. It is an instrument. This is used for consideration, or I would say this is used as a consideration. I'll give an example. Say we have something called Friday funders. So in our office, we have this concept of Friday funders, where all the article assistants, they choose a particular topic. Every particular individual speak for 30 minutes based on the content, based on the deliberation, based on the research, and based on the hard work. One particular junior will be selected where he will be given a voucher for rupees 500. This particular voucher, which is meant for 500, this can be used for purchase of a book. Purchase of a book. Say, for a moment, let us assume there is a law book house. The name of the shop is Law Book House. This particular law book house prints something called gift voucher. They say that please use this particular gift voucher, which can be given to your employee, So I, as a chartered accountant, I buy, say, 100 vouchers from this particular gift voucher. Every week, I give a voucher which is worth rupees 500 to my article assistant. So what does the article assistant do? He goes to this particular law book house. He purchases, he could buy books or stationery, anything. Assuming for a moment, he purchases financial accounting book, which is worth 800 rupees, He issues voucher for 500 rupees, and also he pays balance amount by cash for 300 rupees. So here, if you observe this transaction, my voucher is nothing but an instrument which is used as a mechanism for exchange of a consideration. Here, this particular voucher is used or issued by a person who's identified for this particular purpose. Now, at times, my voucher, when I talk about a voucher, this particular voucher may be time bound, maybe no time bound. In the sense, let's take example of say Diwali. For Diwali, say employer who has got 1,000 employees. He gives a gift voucher each of rupees 2,000. Assuming this gift voucher is given by a particular, say, apparel shop. Now, if all the 1,000 employees goes to this shop on a particular Saturday or Sunday, it'll be a crowd. So rather what they do, they'll say gift voucher 1 to 100, you can use this particular week 1 to week 3. 101 to 200, you can use between week 4 to week 6. So here I specify timelines. Now these are all various characteristics which are relevant for voucher. If you ask, so what is that we are learning here? We are learning the concept of voucher. We are also learning how business happens, how business requirements are dealt. We are also understanding how money is curated. We are also discussing how working capital is being generated. Now here, assuming for a moment you are a book house, you happen to be a chartered accountant, you have to be joining this entity as a CFO. Now, if you don't have so much of a business, you will come with this idea. So let's do this way. Let us give a discount of 100 rupees for every voucher for 1,000 rupees. Like if a customer has to come to our shop, we generally don't give a discount. Every customer who comes with a voucher, I give a discount of 100. So there, I'm making the employee to spend 1,000 rupees well in advance than the sale. And also, I'm creating a need or demand for 1,000 rupees. This is how my law teaches me how business is created, how these provisions are analyzed. Clear? So coming back, this particular voucher, they say, what is the time of supply? The date of issue of voucher, if the supply is identifiable at that point. So if you mention week 1 to week 2 or week 3, since the date is identified, this will be my time of supply. In other cases, date of redemption. I don't mention any date. Whenever you want, you can come and redeem the voucher. The date the customer comes for redemption, that would be my time of supply. There is a doubt from Mansa. Can we receive an advance for goods in continuous supply of goods? Answer is definitely yes, Mansa. When you receive advance for continuous supply of goods, there is no time of supply. Reason? By virtue of this notification, what I have referred to you, there is no need to pay any tax for advance of goods. Now, this particular example, this particular slide, I have actually, this is one slide which I picked from our Board of Studies publication, which is meant for members. We had this work note on annual returns under GST law. From that particular book, I have picked up this particular slide. This is just for common interest. I'll share this presentation. You can download and go through in leisure when you have time. Now, I have taken a couple of examples for us to understand time of supply. Let us assume this is on the basis of section 12. Invoice is raised, invoice date is given, invoice due date is given. Now, invoice due date and invoice date, when they compare, due date is as per law. Invoice date, probably I have deviated as per law. I could have issued an invoice in advance. I could have issued an invoice belatedly. Payment as per books of accounts, money credit in the bank account. When I compare these four elements, how my time of supply is identified, we will take examples. 10th October 2020, I issued an invoice. Actual due date for issuing an invoice is 20th October 2020. Means on removal, I need to issue a tax invoice. But for my customer to make a payment, unless I issue an invoice, customer doesn't make the payment. So probably that could be the reason I issued invoice on 10th October 2020. Customer actually made the payment on 26th October 2020. Money got credited into my books or bank on 30th October. Out of these four, what would be your time of supply? Answer for this: the day you are supposed to issue, that would be time of supply. Sir, what if I have issued the invoice in advance? That would be relevant as my time of supply. Since I issued on 10th October, my time of supply would be 10th October. Though technically 20th I have to issue, since you issued well in advance, this 10th October would be my time of supply. Next question. Advances received. 30th October, I have issued the invoice. As per law, I am supposed to issue the invoice on 20th October. I received money from my customer on 10th October. This money, the check which I have received, was actually credited in the bank on 30th October. What would be my time of supply? I received money on 10th. I issued invoice on 30th instead of 20th. This is my actual issuance to customer. Actual issuance to customer. 20th October is as per section 12. Read with section 31. So when I have to compare these two, the answer would be whichever is earlier. That means 20th October, as per law, you are supposed to issue. That would be my time of supply. Invoices in relation to removal. Invoice issued after removal. 30th November, I have issued an invoice. My due date for issuance is 20th. On 20th, actually, I removed, but there was a delay in raising an invoice. So my software is not working, my accountant is not there, I forgot various reasons. I received money on 16th November and this got credited into my bank account on 30th November. So here, though actually you have issued invoice to customer on 30th, my time of supply as per the GST law is 20th November 2018. This would be your answer. Next, time of supply for services. This is pretty simple and this goes in line with our accounting standard 9, which deals with your revenue recognition. The point in time when you have to recognize your revenue. So here, section 31 refers to something called, just give me a minute. Time of supply shall be date of issue of invoice by the supplier or date of provision of service. Now here in clause A, they say my time of supply will be date of issue of invoice. Whatever the date you issued invoice, that will be time of supply. provided if the invoice is issued within the time prescribed. If you have issued the invoice within the time, that would be my time of supply. Or date of receipt of payment, whichever is earlier. So one is reference to tax invoice. Second, this is subject to time limit or date of receipt of payment, whichever is earlier. So here, my time limit prescribed is as per rule number 47. As of today, 30 days is the time limit within which tax invoice has to be issued. So what if the tax invoice is not issued as per clause A? Then they say date of provision of service if the invoice is not issued under section 31(2) or date of receipt of payment, whichever is earlier. Clause number C, date on which recipient shows the receipt of services in books of accounts in case if A and B are not applicable. I'll give an example to understand this section 13. Time of supply for service. Provision of service plus grace period 30 days. I'll give an example of manpower supply. Manpower supply. We have this is one classical example for how the industry is operating. They have service provider XYZ Limited. Service recipient ABC Limited. Now here, the terms and conditions are like this. Before raising a tax invoice, the conditions are: step 1, get attendance sheet. Step number 2, obtain approval for step 1. Step number 3, attach EAPF or ESI along with step 2. So here, my customer says, look, first you get the timesheet approved for manpower supply. Like example, let's take example of a software company. Say, I deploy 5 juniors of mine with a software company. They'll say, because your 5 people are working, I'm not going to pay salary. I have to get the attendance, which is from their accounting software. So my employees have to download the attendance. This attendance I'll send to the HR. HR will approve that attendance sheet. I'll come back, I'll get back that attendance sheet approved. Then I'll calculate the salary as per the number of days, and I show so much of EPF, so much of ESI has been paid to the government. I attach my invoice, I attach approved timesheet, I attach this EPF ESI challan. Then customer will say, log into my portal, log into supplier portal, key or make a data entry of this information for payment. Now here, assuming that 31st March 2023, the service is completed. Attendance sheet is available on 1st April 23. So this approval for timesheet is received on 7th April 23. Based on 7th April, on 10th April, I actually get to know how much is the salary payable. 12th April, I do the calculation of EPF or ESI. I make the remittance on 15th April 23. Now, as per law, on or before 30th April 2023, you have completed your service on 31st March 2023. Law says under section 13, subsection 2, they say, you have completed your service on 31st March. I'll give you a grace period of 30 days. So on or before 30th April 2023, raise a tax invoice. Raise a tax invoice. So here, the good part with GST law is all these practical difficulties are examined. Since your service is completed on 31st March, I'll give you a grace period of 30 days. So what if I fail to raise invoice on or before 30th April? For a moment, 15th May 2023, I raise a tax invoice. Then my section 12 says that deeming provision. They say that I presume that on 31st March 2023, your tax is provided. So the tax is due on 31st March 2023. They set aside your tax invoice and they say, please pay the interest from 31st March to 15th May or June whenever you're paying your tax. For this particular gap, interest will be demanded under GST law. This is what time of supply for services is discussed on. You have any doubts? Please let me know, ma. Sorry, I missed some of your answers. Mansa, Viraj, and Shakti have given you answers. Hope you have cross-verified your answers with my example given now. Mansa is asking this question. Law book house voucher worth rupees 500. Time of supply in this case is date of issue of voucher. Mansa, I'll put it this way. If I have, like as a book house, I gave a voucher of 500 rupees. Now, when I given a voucher for 500 rupees, if I mention this voucher is valid till 1st April till 30th April, because the date is specified, that would be my time of supply. Rather, I gave a voucher for 500 rupees. This voucher can be used any point in time. The day customer comes and uses this particular voucher, that would be the point of time of supply when the tax needs to be paid. Reason, if I don't know what is the point in time, I cannot pay the tax. Like for a moment, like Mansa, you have actually asked a very good question. I'll give this example this way. On 10th April, the rate of tax applicable to books is 18%. I'll come to my slide and I'll explain this, Lima. A very good question. I'll explain this by way of example. This question is from Mansa. I'm explaining this way. 10th April 2023, voucher is issued. Voucher issued. Say value of voucher is 500 rupees. Redemption on this date, my rate of tax is 12%. Date of redemption is say 30th May 2023. On this day, my rate of tax is nil. Now, I was giving example under section 12 with respect to voucher. I have two scenarios. Scenario number one, date is specified. No date is specified. When the date is specified, this date is relevant for my time of supply. So here, if I mention that 1st April 23 to 30th April 23, and when I mention this, my time of supply will be April 23. Rather, if I say the date of voucher is 15th April 23, and this has to be redeemed on 15th April, then this becomes my time of supply. So if there is a specific reference to date, that will be my time of supply. If no date is there, my time of supply says whenever redemption is done, that would be my time of supply. So in this case, assuming my customer comes on 30th May, on the day, the rate of tax is nil. So I wouldn't charge any GST for that particular book which I have sold. Hope this example is clear, Mansa. With respect to specific books which are sold by a specific store, very good logical reasoning, which helps you to examine the practical difficulties in your practice. Viraj is asking this question. Shall I write example? Yes, Viraj. You feel free. You can feel free to do so. You wanted this slide to write down the example, Viraj? I'll just come back. Let me come back to my slide. Viraj wanted to make a note of this example. Yeah. Viraj, hope my screen is visible, ma. Meanwhile, I'll just take up other questions. Mansi is asking this question. In your last example, 12 subsection 4, okay, voucher was worth 500, but the employee bought books for 800. Then what will be the time of supply for another 300? Okay. Again, Mansa, just come back to the basic discussion. What is a voucher? It is a consideration. If this consideration is time bound, that consideration for 500 would be taxable. Balance 300 when it was balance 300 when it was paid, that point in time I would tax. I repeat, Mansa. I repeat once again. I have issued a voucher which is time bound. So that consideration which is time bound, that is taxed. The balance 300 when I receive, I would tax that point in time. This is how I deal in case of a time bound voucher. So what if it is not a time bound voucher? 500 along with 300, whenever customer comes for redemption, that point in time I would be taxing. Hope this is clear, Mansa. Aniket is asking this question. So within 30 days, provision of service invoice has to be issued. Answer is perfectly yes. Mansa, I'm continuing. If you have any doubts, you can put across your question. Now, time limit. Sorry, one point I have missed here. No, I have covered. Time limit. In case of a normal person, 30 days. In case of a bank or a financial institution, 45 days. Examination MCQ. Please remember, only for banks and financial institution, that is NBFC, my time limit is 45 days. Like assuming XYZ bank has given a bank guarantee, has collected rupees 20,000 as bank guarantee charges. This bank guarantee charges, say, is subjected to GST. What is the time limit for issuing tax invoice? Answer would be A, date of receipt. B, 30 days from the provision of service. C, 45 days from provision of service. D, date of tax invoice. D is little tricky. I'll say none of the above. None of the above. Now, I cannot say date of receipt is correct answer. Reason, I could have received money in advance. I could have received money after 6 months. I could never receive money. So if I say date of receipt, that is not a perfect answer. Reason, I not going to determine on the basis of date of receipt. Rather, I have a time limit of 45 days for determining my place of supply. Within 45 days from the date of provisional service, tax invoice has to be issued. So answer for this question would be C. C would be my answer. Hope this is clear, ma? Similarly, for goods, for services also, any money I have received more than my tax invoice up to sum of rupees 1,000, I can choose when I issue a tax invoice. Now, this particular provision, many of you, but like we have this status. My advice would be, when you get into practice, when you get into industry, please start your career with startup or take up the startup for better exposure. Reason, they teach many things out of the book which we don't know, or your experience of 10 years you'll gain in a span of 2 to 3 years. That is the beauty with startups. Assuming for a moment, I'm a startup, I render services through e-commerce platform for housekeeping or various activities, support function. Say, I need a plumber. I'll say, sir, no, you can book a plumber based on number of hours you have to make the payment. And sir, you have to make no token advance of 500 so that my plumber can come to your place. Most of the time, my plumber goes, customer will not be there. Or like customer says, I don't require. For that reason, I collect money of 500 rupees in advance. I send my plumber charges 300 rupees for the service. I have received 200 rupees. Now I'll say to my customer, sir, look, you have made the payment for 500. My invoice is for 300. Balance 200, I'll put in your account. So you as a customer, you have a choice to take back that 200 rupees or you leave the 200. Whenever you have a next service, I'll consume this particular 200 rupees. Money received in advance, which is sitting as a current liability, I can decide my time of supply up to a sum of rupees 1,000 rupees. So all these e-commerce operators or startups who are into this service sector, you have a very good time to deal with this particular time of supply. Now, similar to your continuous supply of goods, continuous supply of services. Very pretty simple. They say, look, as per your contract, whenever you receive your payment, please issue invoice. So there is no periodical payments. Then whenever you have completed your service, please raise a tax invoice. So in case of a continuous supply of services, where the contract is minimum for a period of 3 months, the point in time when the customer has to make the payment as per the contract, raise a tax invoice. So there is no contract clarity with respect to payment. Then there will be something called milestone completion. So as and when you have finished your activity, please raise your tax invoice. Now, in case of reverse charge for goods, 3 conditions. The date you have received the goods, the day you made the payment, the day 30 days from the date of invoice. Because that is goods, I have 3 conditions. Now, this being a service, the first condition, receipt of goods, I ignore. So I have only 2 conditions. What is that? The day I made the payment to my supplier, or 60 days from the date of invoice, my time of supply gets triggered. Here, in case of goods, I was given 30 days. In case of services, I was given 60 days. So what if these 2 are not there? The day when recipient has booked the receipt of service, that will be my time of supply. In case of associated enterprises, this is parallel to your TDS provisions, date of entry in the books or making the payment, whichever is earlier. Similar to your income tax provisions, I have a related party transaction. The day I book the payment or the day I book the invoice or I make the payment, whichever is earlier, I have to pay my tax. Watches, whatever we have studied in our goods, the same concept is applicable for watches also. Further, in last session, I was talking about exemptions. I spoke with respect to interest, late fee, penalty. So here, along with my main supply, if I collect from my customer interest or late fee or penalty, any amount I have collected, the day I receive this particular money, that shall be my time of supply. The date on which supplier receives the payment, that will be my time of supply. This was a continuation of my section 15, where I drawn a line with respect to activity of tolerance. Students who have heard my session on exemption, you would examine how this section 15 is relevant for this particular example. Change in rate of tax. This is one fantastic provision. If this provision is not there, I'll give you one example how the life is going to be miserable. Now, at times, lawmaker has to, I would say, we should have a breathing space. And if law is not designed to cater to your requirements, things will be very, very chaos. Like in apps, like emergency is one example. When government has introduced, when the government wants to bring emergency, citizens are at dark. They don't know what is happening. You're like example of Manipur. Internet is not there. Telecommunication service is not there. You're disconnected from media. Money, you don't have dish TV. You don't have a newspaper. You don't know what is happening in the outside world. No Twitter, no LinkedIn, no Facebook, and nothing. Sitting at your home, you don't know what is happening in the other street. That is a kind of gamut which is dealt in section 14. I'll give an example, then we'll come to section 14 to understand this provision. 47th GST Council. This is a path-breaking GST meeting, where a decision was made saying that change in exemption, change in rate of tax, change in rate of tax, change in rate of tax. I'll give a very simple example with respect to exemption, where accommodation in a hotel, where tariff up to rupees 1,000 is exempt. This was the law up till 47th GST Council meeting. This changed after 47th GST Council meeting. 1st July 2017 onwards, from here till your 47th GST Council meeting. What they said, this, I would put the date, this is up to 17th July 2022. So any accommodation up to 17th July 2022 is exempt. Any services on or after 18th July 2022 is taxable. This is how law was brought in a hurry-burry by virtue of 47 GST Council. Effective from 18th July. Now, I still remember this date, 18th July 2022. 18th July 2022. Now, I'll give examples this way. Scenario 1. Advance paid on 15th July 2022 for room on 20th July 2022. Scenario 2. Order placed on 14th July 2022 for room on 15th July 2022 to 20th July 2022. Now, these are two practical cases I have taken, how the industry is going to affect, how the business is going to affect, and you and I, like you're all going to be a future chartered accountants. We call you as a FCA. How our business is going to get affected. So here, sir, I have received advance on 15th July. My accountant is very, very studious. Like say Viraj or Mansa. For a moment, I put Viraj or Mansa as an accountant. They're very studious. सर पैसा आ गया, इनवॉइस दे दिया. मुझे कस्टमर आने के लिए इंतजार करने की जरूरत नहीं है. 15 जुलाई मुझे पैसा आ गया, मैंने इनवॉइस दे दिया. क्यों? सर, my customer wanted invoice. Unless I issue invoice, he is not willing to make the payment. So here, on 15th July, even tax invoice was issued. But actually, service is given, provision of service is happening on 20th July. Question came here. Should I pay GST or should I enjoy exemption? On 15th July, the rate of tax is nil. On 20th July, the rate of tax is 12%. Question comes here. So should I pay GST or should I not pay GST? Similarly, order is placed on 14th July, where customer, say 15th to 20th, assuming for 6 days, 60,000 is paid, or I would say 30,000 advance is paid, and balance 30,000 tax invoice is issued on 20th July. Now question comes here. 20th July 22. Question comes here. Sir, how do I calculate? Should I pay GST on 15, 16, 17? I'll take exemption on 15, 16, 17, and I'll pay GST on 18, 19, 20. Sir, already have issued a tax invoice on 30th. What do I do? Now, these are all practical issues which was explained by virtue of section 14, where this has taken into consideration three elements. Element 1, element 2, element 3. Element 1 talks about supply. Element 2 talks about your tax invoice. Element 3 talks about your payment. These three elements are the pillars for determining time of supply for these kind of complex issues. My section 14, entire discussion is on your supply, your payment, your invoice. Your supply, payment, invoice. On basis of these three elements, I'm going to decide how my time of supply should be taken. So here, when I apply these provisions of 14, if time of supply is here exempted, if my time of supply is in this block, it is taxable. So if your time of supply is 17th July, no need to pay tax. If your time of supply is 18th July, then pay the tax. This is how I evaluate my GST provisions. I'll come to my slide to make you understand. So here, my section 12, section 13, which talks about goods and services. In case of goods and services where both have been supplied before change in rate of tax. So here, clause A is explaining where supply out of three elements, supply has taken place before change in rate of tax. Then how do I identify my time of supply? They're saying that examine invoice, examine payment. Now here, like your constitution, like your GST council or your parliamentary affairs, whenever we go for your voting, we say simple majority. when I have to take a decision, I make a voting like out of three situations. Situation, your no, pillar one, pillar two, pillar three. Examine these three pillars. If you get true, true, false. If you get true, false, true, or so whichever is higher, that would be prevailing. That means out of these three, whichever happens in the old regime, whichever happens in the new regime, you take a decision is what they are saying. So here, let us take scenario number one, where I supplied the goods before changing rate of tax. So here, I'll put my this example of hotel accommodation here. My incident happens to be 17th July 2023. This is a key decision where I have to identify what would be my time of supply. So here they're saying that in case of goods or services, I'll pick service. Service have been supplied before the change in tax. So here, 15th July, I have supplied services. But my invoice is issued on, say, 18. My payment is received on 20th. I repeat. My service is completed. My service is completed on 15th July. For this particular service, scenario number one, invoice is issued on 18th. My payment is made on 20th. Now, out of these three pillars, this is old regime, this is new regime. Since two pillars, when I do the voting, what happened? I got decision on new regime. That is, new regime is taxable, old regime is exempted. So here, my time of supply will be earlier of payment or invoice, whichever is earlier. Earlier of invoice, this is my invoice, and this is my payment. Earlier of these two would be my time of supply. Hope this is clear, students. In relation to services, hope this example is clear now. Please confirm. If this discussion is clear, your entire section 14 is clear. Pooja is asking this question. If what would be the time of what is that? So what is the time limit of for issue of invoice when goods are supplied to casual taxable person? Good question, Pooja. See, when I supply the goods, I don't look at the seller, I don't look at the buyer. I just look at my time of supply, that is removal. When the goods are meant for not sale on approval, the day you remove the goods, you prepare tax invoice. Or the moment you prepare tax invoice, your time of supply is triggered, Pooja. I repeat once again. Now, Pooja is asking this question. Sir, if I supply the goods to a casual taxable person, what would be time of supply? My answer would be, I don't look at the buyer, I don't look at the seller. I just look at what is the supply. The day I remove the goods, if it is not meant for sale on approval, the day I remove the goods, tax invoice has to be prepared. The moment I issue a tax invoice, time of supply is triggered. So if I send the goods on sale or approval basis, again, when I say sale on approval, it could be for regular registered, it could be unregistered, it could be CTP, any person. Time limit is 6 months. On or before 6 months, I need to get an approval. If I get an approval, that would be time of supply. If I don't get an approval, then the day you remove, that would be time of supply. Hope this is clear, Pooja. Mans is asking this question. I think this is there in service tax also. Yes, it is there in service tax. And this is a very, very interesting provision. This example is clear for everyone, ma? Good. Now I'll come to second scenario. Let me just clear my scripting here. Now, old regime is exempted, new regime is taxable. Now here, second scenario. My service is completed on 15th. My invoice is issued prior. So this is provision of provision of service. They say invoice is issued. Invoice is issued on say 14th. My payment is received afterwards. My payment is received on say 18th. Majority of voting. Since two incidents are prior to change in tax rate, that is old regime, this would be exempt. My date of issue of invoice will be relevant. This will be time of supply. Because time of supply is on 14, the GST is not applicable. This is my scenario number 2. Let me just erase this. Third scenario. My invoice is issued on say 18th. My payment is received on prior. For a moment, let us assume 14th. Since the service is completed on 15, I also received payment on 14, but only invoice is issued on 18. Majority will prepare. That is date of receipt of payment. That would be my time of supply. Accordingly, this would be exempted under GST law. Hope this section 14, where provision of services prior to completion, how I determine my time of supply. What if invoice and payment is made on 17 July 2023? Scenario 1, Viraj. Achha, you are asking all the three. When all the three are made on 17 July, I don't look at 18th, that new regime. Because my service is completed on 17 July. I issued an invoice on 17 July. I also received payment on 17 July. On that day, it is exempted. I continue to enjoy exemption. Hope this is clear, Aniket. Good. I'll come to the next slide. Now, this is a scenario where my place of supply, the provision is happening after. My place of supply, time of supply or provision supply is after. I'll take the same example. My change in point, this is on 18th July. This is old regime. This is new regime. Old regime exempted, new regime taxable. Say here, they're saying that the services are supplied after the change in rate of tax. So I'll mark here my answer. Place of provision of service is on, say, 18th. My service is being rendered on 18th. Scenario number 1. Invoice is prior. So here they're saying that invoice is on, say, 14th. Payment is after. My payment is received on 20th. Now, when I do the voting, since 2 are after, that is new regime, my time of supply will be date of payment. This will be my time of supply. That accordingly, I would be paying GST on this particular supply. This is scenario number 1. Scenario number 2. I'll just erase this. Scenario number 2. My invoice is issued prior. My invoice is issued on, say, 14th. My payment is also received advance, say, 15th. When I do voting, out of these 3 pillars, 2 pillars are in the old regime, 1 activity is in the new regime. Because of, by virtue of which, earlier of invoice or payment, that would be my time of supply. When I say this is my time of supply, it would be exempted activity. Scenario number 3. Let me erase this. My time of invoice. My invoice is after. So invoice is issued on 19th. My payment is received advance. My payment is received on 15th. Because out of these 3, 2 events are happening in the new regime, my time of supply will be date of invoice. Accordingly, it would be taxable activity. This is how I apply provisions of section 14 for our understanding. Let me just see if there are any doubts before I go further. Mars is asking, so please elaborate date of payment. When I say date of payment, Mansa, just keep in mind the day when I receive money in my books of money, I account as a receipt in my books of accounts, or the day money actually got credited into my bank account, whichever is earlier. Like no, at times I try to play around the law. So here, when I talk about date of payment, law is very clear. The day you recognize as money received in books of accounts, or the day money got credited into your bank account, whichever is earlier will be your date of payment. So here, I need not verify bank statement. The day I have recognized as a receipt, that is good enough for me to say date of payment. Now, common errors when we solve this problem, when we deal with this particular chapter 12 and 13, section 12, section 13. It so happens that practical issues. So tax invoice not issued, goods were dispatched. Tax invoice was prepaid, goods were not dispatched. Like example, generally the accounts team will leave by 4 o'clock or 5 o'clock. The dispatches will happen after 5 o'clock till say 8 o'clock or 9 o'clock. Like in one of the practical reason, the accountant says, no, please, no, my vehicle is leaving at 5 o'clock. I'll prepare the invoice and I'll give it to security. Whenever the vehicle comes, let the security hand over the invoice to the truck fellow. I prepared a tax invoice, but the goods never got dispatched. I forgot to cancel that at the month end. I pay taxes. I recognize that inventory, there is a mismatch. I build the inventory, but the physical inventory is there at my factory. Similarly, in relation to contracts where there is a composite supply, I need to identify, is it a supply of goods? Is it supply of services? Why? When money is received in advance, I should know whether time of supply is triggered or not triggered. For services, time of supply gets triggered. For goods, there is no time of supply for advances. Next issue. Money received at a head office. Now, assuming I am a company, I have operations in Haryana, Madhya Pradesh, Punjab, and Tamil Nadu. My head office is in Tamil Nadu. When money is received in my bank account, it is very tough for me to identify in relation to services. Is it pertain to Haryana? Is it pertain to Rajasthan? Is it pertain to Tamil Nadu? So if I don't know in which return, in which state, I'll offer it for taxation. Similarly, when money is received in bulk, I don't know. Is this a money for my outstanding bills, or is this a money for advance for the work order which was issued? Similarly, identifying the goods, identifying the services, identifying the money received in advance for goods, for services. These are again another common issues we don't know. Also, when you talk about this composite supply, say goods are taxable at the rate of 18%, services are taxable at 18%, or goods are taxable at the rate of 28%, services are taxable at the rate of 18%. So how do we identify what is what and how my time of supply has to be identified, right? So these are some discussions in relation to time of supply provisions under GST law. Hope you have enjoyed and understood the provisions of section 12, section 13, section 14. These are very sweet and short provisions which takes your life when you get into practice under GST law. The next session we are going to meet on Saturday is in relation to valuation. Till then, good night, goodbye.